Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Tuesday, September 30th, 2025. It's 12:41 p.m. Eastern Time. I'm starting the video, so we're about halfway through the trading day, and here's what I'd like to do in this one. Just go over a few of the things I'm watching, continue to look at the credit markets, including and not limited to private credit. This is the proxy I've been sharing with you. One of those that I'm watching. I'm watching individual companies as well, and a couple of the ETFs, including this one, BIZD, the Market Vectors BDC Income ETF. That's business development companies. Those are ones doing private credit. And that's it. So this was when we first started tracking it. We had support there at 1574, which it broke. The first target bounced as expected back to the support. Once broken, becomes resistance. Then went on after getting rejected off that former support, now resistance level. Went on to hit take out the first target, hit the second target, danced around there a couple days. And I just wanted to point out we're clearly below it, which increases the odds T3 will be hit. And again, this comes after Fed rate cuts. And more importantly is just keep an eye on it, whether you're in it or not. I believe that any solid drop below that T4 level and the stock market will likely be in crash mode, because that means something's most likely blowing up in that sector. I'm watching, again, some of the individual names in there. This is one of them, Goldman Sachs Business Development Corporation or company, just kind of free falling down now. And again, so, what I'm looking for is where's the next shoe to drop in the market. We know every time you have an extended overvalued stock market with extreme speculation or a lot of speculation. And what we're going to do in this video, by the way, guys, I'm going to go over, again, I'll hit on QQQ quickly. I'm going to go over small caps. I want to highlight that again. I gave that as an official trade idea out to you. And I want to go over just the top, some of the top largest components in the Russell 2000 index, or IWM, which is a proxy for shorting it. And by doing that, you can have either individual trade ideas, if that's what you're looking for, individual stocks, or it kind of gives you an idea of what's going on overall and how the posture of the small caps, the individual components look. Now, of course, we're not going to go over all 2,000 or so components in there. Again, I'm just going to do the top couple dozen or so. And then also I want to do, I told you recently, I added the ARK ETF to my things to watch list. There's others out there, but I know that one's just known to have the hot stocks du jour. And this whole the highs in the stock market is about those, mostly about those high-flying, high-growth, usually mostly tech companies. Not all, but I'm going to go over that and just kind of give you an idea on how those companies look, especially because that's a lot of the frothiness in the stock market. So let's jump over to QQQ. I already covered the private credit. QQQ, as I stated recently, this was kind of my hold tight on the QQQ shorts. No reason to add there. But if you do fall back below the level, this is where I give you the other day when we had a bounce where we have an objective re-entry up to the downtrend line and intersecting price resistance. It goes up to about, it's a resistance zone, runs up to 596. And so once we take that out, we'll also have taken out this trend line. And then that's where, in my opinion, it's objective to either initiate a new short or add to an existing short position, I'm sorry. And most likely that's probably what we're going to get if we get a shutdown. The shutdown, they're making it seem highly likely if you've been following things, and if you know how Trump is, that's his negotiating tactic. I think he's going to really drive a hard bargain. The Dems don't want to back down either, so I would say there's a pretty good chance we're going to get a shutdown. And I'll also say this is one of the most resilient markets I've seen, not in years, but in decades. The trend, the bid, it's shaking off just about all bad news and wanting to hear rallies on what it wants to hear. Good. In other words, good news is good news, and bad news is dismissed or spun somehow as good news, because bad news can be spun as good news. If you want it to be, you just say, oh, well, it's going to increase the odds of another rate cut or more rate cuts. So that's kind of the state of the markets right now. However, I've done this a long time, and the reason I'm doing this video, I'm seeing more and more and more setups that are just ripe for the picking, meaning to break down. I'm talking bullish stocks near or at recent or all-time highs, setting up in clearly bearish chart patterns. So I want to do this video to share that, because I do believe these will play out. And I think when they do, because there's so many coming together right now, that it's likely to trigger a very fast swoon down. So all I can tell you is just, be ready. From dull markets like this, where we've kind of been going sideways now for a few weeks, momentum slowed, as I've showed you. A lot of my momentum indicators, some of you in cross on the weekly, some of these market leading stocks have now triggered bearish PPO, high level bearish PPO crossovers and other type sell signals. So again, the takeaway here is, just be ready, whether you're bull or bear, looking to go long, short, react. And I'm going to go over the charts and show you the levels that I think will make a difference. And that is starting right here. So we're not far from it. And I think it'd be a quick swoon down. You already have some price targets on QQQ, on both the 60-minute chart and the daily chart here, and even my weekly chart. But again, I'll cover the weekly targets if and when we get some the shorter term targets levels taken out that I just started with on the 60-minute chart for you there. Right now, like I said, any and all of these lines that have given you a potential, they're all support levels, but this is the big one. I think now, before I was saying it, I still do maintain T2 about 551 or so. Well, I have it at 550.88 is a very big level, but I think that's where our first target was on this previous short trade, which we're no longer in. That one was stopped out. This is a new one given to you recently here, short on the break of that, and then on a kickback there. And it's kind of, again, the plan on that, I'm sharing you kind of my plan. I'll wait and hold, wait for this level to go, and that'll be the next objective short entry. And then boom, 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 you see targets. And again, the takeaway is based on the technical posture of the charts, sentiment, very low put to call ratio, short interest on a lot of key stocks. All that stuff comes together. Huge margin debt, which I've covered recently, and we can see an unwinding of that. Again, it can be a very swift move down. Tons of profit to be made if you're a nimble and flexible trader, and you can get in short and pin that down, and stay short to some of the deeper targets if we get the catalyst, guys. So I can sit there all day long, and I do this all the time, talk about a stock I'm very bullish on, it's in a bullish technical posture, one of let's say more promising long side trades, or vice versa with shorts. But there's a huge and colossal difference between a trade setup, something that's potential, but you need that catalyst, that sell signal on a short trade, or a buy signal on a long trade. And so that's what we're going to do in this video. Let me move on. All right, so that's QQQ, what I'm waiting for. We'll start with the smallies. IWM Russell 2000 Small Cap ETF, thrown out to you recently as an objective short entry based on both this daily and the weekly chart. Let me go back to this board right here. On the weekly chart, as I've covered, you have a potentially massive triple top pattern. This is multi-year, 3 distinct highs there at right around the current level, and big negative divergence that's been building. And so I have some very aggressive, but I think very doable long-term targets. First things first, I'd like to see, as I told you in the last update, to help solidify this, is a solid weekly close below this uptrend line, the uptrend line off the April lows. And so far, the week is very young. Again, it's only Tuesday midday. There's going to be a lot of movement this week, one way or the other. We could certainly break out, and I already addressed that. If we do break out, you want to look for a failure, move back down below that triple top high around 245 or so, and also then, which would happen around the same time, down below the uptrend line. And then that would be the next objective short entry. So just kind of like QQQ, if it breaks out, you can't make an objective case for short a breakout. You can take a speculative case that you suspect it's going to fail. Sometimes I'll do that. But, if you're trading, kind of disciplined, if you will, or by the book, breakout is bullish unless it fails. Then when it fails, it's pretty darn bearish. So that's how you trade that. And so if you break out, we should be more concerned. And again, I mentioned as maybe a starter fractional position here with an add-on if those additional sell signals come. And so, on a breakout, you need to be more concerned with where you're going to stop out. And where you stop out will be unique to your own entry price, your own price target or targets, etc. All right. And so on the daily chart, we broke down as highlighted recently, and we back tested. Breakdown, back test 1, 2, and nice little rejection candle today. Nothing huge, as I like to say, the redder the better. So if we can get down below, what should do the trick if we take out the recent lows from that breakdown candle, that should do the trick on IWM. But again, looks good to me. I gave you given a suggested stop again based on that entry point and this target out right here. Pull back to that third target zone and the 200-day moving averages right there. All right, let's dive into the components. So as I often do when I load these an ETF, I have all the components on the right, and I sort them by market cap. Now I'm going to say this, that when I do it on SPY and QQQ, those are the largest holdings because those two are cap-weighted indexes. But I've looked at IWM before, and the top components in IWM, every time I've checked in the past, don't mesh exactly with the same, the highest market cap ones. So I'm going to start here. Now, with that being said, they're in there. They're going to make a difference. Unless some of these stocks, sometimes they get moved out. They do the rebalancing. Some get too big and they get moved up to the mid-cap indexes, and some get too small and they drop out. But this one is number one here at 84.5 billion. MicroStrategy. We've slayed this stock long and short. We had a sell signal back there, the bearish golfing candle hit first, second, on the way to the third, but then right here we covered all shorts, and I actually made this, turned around. Instead of maintaining these targets, I threw this out as I believe this one might have been another one of the crypto ones. Was it MicroStrategy or Coinbase? Yeah, I believe it was this one. We made it as a long trade idea back then off the lows. I'll have to check the different boards. Either way, it bounced and it put in a marginal new and still divergent high. It has since taken out the 200-day moving averages, and it's getting very close to this. This is a powerful sell signal if and when taken out. This is your primary uptrend line, comes off the December of 2022 lows, and as you can see, the stock is coming up to that. And so Bitcoin's been sucking wind lately. Not really going down, but it's not going up. I'll try to get to that in another video soon. I don't want to get off topic here. We'll never finish this one. So there's if that trend line is taken out, you have a first target there at 234, really the same targets as before. And then these are your next targets. Really, you're just continuation of that trade back here. It never went on to make a new high, but again, for all the reasons back then, made sense to cover all shorts and go long on April 7th. All right, next up, AXON, about 55 billion. And so as I go through these, I'm gonna pick it up a little bit. I'm not gonna expand on every one. I just want to show you the common thread here. Big divergent highs. It may not say so. Sometimes I'll put DH or write the word divergent high, but you have these big negative divergences, and and that's what typically leads to these drops. Even if it's in a bull trend, these corrections are high double digits. 23% there. Previous divergent high right here was a drop of 33% back to the 200-day moving averages. So one of the things a little different this time around. So when I just showed you, this is how I've had this chart marked up. I had a divergent high there and there, and now one here. The other two times we're comfortably above the 200-day moving average in a bull trend, so it sent us back to test the 200s. That's where traders are going to come in and buy a lot of stocks at those. The blue and red lines are your simple and exponential. This time around, we're not as high, and so a correction. And it's actually, if you look at it this way, guys, I didn't even have it. Oh yeah, I did have it marked up properly. That was DH1. Smaller divergent high. This divergence has grown larger, so it never reset at that point. In other words, that was our divergence at that point. But you can see we continue to make lower lows on these momentum indicators right here, and higher highs in prices. So it's much larger divergence from this point. And that, in my opinion, will most likely send it below. You have really nice price support there. This was high, all-time high, breakout, backtest, backtest, backtest. We're currently backtesting. So when this one breaks down, and guys, again, consider these short trade setups as well, especially if some of you are options traders, or some of you like to trade individual stocks. Yeah, there'll be one stop along the way. I'll give you a target right there if you're interested in this one. It's going to hiccup around here, most likely 587.70. But ultimately, these are my targets, at least down here. And that's going to be a drop of, let's just do it from if the 200s are taken out, or this price support. Close enough. I'm right on the 200s. That's going to be a drop of about 31%, an additional 31%. We've already fallen about 22. All right, we'll go through these a little faster. Aries, divergent high, drop. And again, these are small caps. They move pretty good. That was a 45% drop right there. And really had, well, there was a breakdown and a back test of the line I had. This is our next divergent high. And see, a lot of these stocks, unlike the tech / NVIDIA heavy QQQ and S&P 500, a lot of these guys aren't making new highs. It's just a continuation of a breakdown that already occurred, and same with the index itself. So there's my primary uptrend line. I've had that there for a long time. It rode up the 200s. You can see how well that trend line came in with the 200-day moving averages. So all this is a breakdown, back test 1, back test 2, and now it's taken out the 200 days again. Last time it took out the 200s was right here. If you shorted that breakdown, even if you waited to the break of the 200s, not the highs or the back test way up here, you still had 30% profit on a short trade. And if you covered, like I did and suggested on the April 6th, 7th lows, then you booked that profit and you could have went long the stock. And it's basically just come full circle. And then breakdown, back test, boom, 200's taken out. Okay, so there's a pattern here, and that's why I'm doing these. There's IWM again. It's in my watch list. EME, MCOR, bearish engulfing candle. Still below it, negative divergence. You can see the divergence right here. Again, last time it had a divergent high on the daily, it fell 40%. And you can see some support right there. Nice wedge on FIX, Comfort Systems USA. There's your uptrend line, which needs to break to trigger a sell signal. There's your divergence line, which forms a bearish rising wedge, just like you had a divergent high right here. And nice setup. You can see targets all the way down to about 557, 558. So on that one, for example, you want to cover around a little bit above that reaction high right there. So you want to cover around maybe 567 or so. 10 points above, because it's a 557 point security. If it was a 57 point security, then you'd want to cover maybe a point or so above it. All right, so nice setup. And again, it's a common theme I'm seeing in this sector. And where to ultimately? There's a primary uptrend line. Wouldn't surprise me if hit. Also wouldn't surprise me if that's ultimately taken out, right? That's a pretty hefty drop if that's hit. INSM, INSMED, breakdown. So a lot of these, and there's a common theme. Quite a few have already broken down pretty well-defined uptrend lines, bearish chart patterns, big divergence on that one. A lot of thin air down to that 86, 85-ish, 86-ish target right there, and the 200-day moving averages. Natera, this is one that I shared with you, I believe, back before, along with a couple other these biotech stocks that do genetic testing. This one has a great test for cancer. If you've been diagnosed with cancer, they can cultivate your cells and then do blood work, blood draws on you every 3 months, and tell if your levels, if the cancer has come back, your particular cancer, if it's coming back anywhere in your body. And so, long term, I like this one. But in the near term, put in a divergent high there. The divergence has gotten even larger here, and it has this little basing pattern here, potential topping pattern. If it takes that out, it's going to take the 200, it's going to head back and head down. But again, common theme is divergences across the board. And I always say, and you've heard me say it a lot, and I have to because every now and then someone's going to come in and say, oh, this has had divergence for 3-4 months. Divergence isn't a sell signal, neither is overbought. What's a sell signal are breaks of support, and that's what I'm doing here, giving you the support levels that will trigger these sell signals. THC, Tenet Healthcare, I already gave this one as a trade idea, but we need to take out this first support level first. So now you have a minor trend line that actually, if you want to get a jump on it, I have a high degree of confidence this one's going to break down soon. Just nice. I mean, again, this is why I'm doing these videos. Look at that divergence. It's just like that divergence, just like this divergence here, just like this divergence here. That one was followed by a 40% drop. This one was followed by a correction of about 20%. This one was followed by a drop of about 37%. This one will be followed by, if it hits, and again, I gave you, this was a trade idea back here. We shorted it. I guess on that breakdown, we hit my first, second, third target. We were coming up on T3, which we effectively hit, but then right here it said cover all longs going, cover all shorts go long. And it also put in a nice fat divergent low, bullish, like a lot of things in the market. And so we bounced, and that's come full circle now. So the profit potential on this one, and you want to get a jump on it. Instead, I told you before, you want to see S1 get taken out on a solid break or closing basis. Now you can short a break of this trend line, and that gives you down to the fifth target, if hit, is going to be about a 46% drop. And that's actually the fifth target. There's 6 targets total on that one. COHR, Coherent Corp, same thing. Put in a divergent high and a nice fat bearish engulfing candle there. So far that proved to be the top. Just put in another bearish recently on this rally. But again, those are topping sticks. So that just says that was likely the top. Rally back to resistance and recently broke down this little minor trend line there. We'll do about maybe 12 more real quick. Mastech, MTZ, bearish rising wedge, negative divergence, waiting for a sell signal to break of that trend line. BE, what is that? Bloom Energy, very steep uptrend line, breakdown back test. So again, the takeaway here is quite a few of these have recently triggered sell signals and breakdowns, just like IWM. And by the way, of course, that's no mere coincidence. I'm looking at some of the largest holdings of IWM. So it would only stand to reason that if the index is broken down, you should see quite a few of the leading, largest stocks in there breaking down as well. PFGC, Performance Food Group Company, nice looking trade. This is an actionable short trade. I'm going to give you, there is a little support I can see right here with these highs right there. We broke down. That's a nice, clean, solid sell signal at this point. You might as well just wait for 102.35 or so to break. And that's going to take this stock down, in my opinion. There's a target right there, that previous double top and divergent high. Another way to do this, if you're trading wedges, take the widest part of the wedge, which I'm going to tighten it up a little bit, about right there. Yeah, that's the widest part. Add it to where the wedge breaks down. That gives you a measured target, which is going to come in with this reaction low. And so that would be your first target, and about just over 95, 90. So we'll call it about $96 and then 92.24. So this is how I expect this one to go. Break down, hit the first target, bounce, come down. And by the time it gets here, it'll probably come in with the 200-day moving averages. And that's going to give you a roughly 11-10% drop. Deckers, divergent low, but also already in its own bear market, put in a big divergent high there, broke its primary uptrend line, and it's been moving down. It's in this little trading range. And if the smallies break down, this one's probably just going to break down below that range and burn through the divergence. But, it does right now have some support there as well. It's support from this previous reaction high, and most importantly, all these lows. So that's bearish if it breaks that out. But because it has divergence, I might not personally want to short that one. Oh, but you can also see like so many stocks. Again, look at this. It's a bull trend when you're above the 200s. You break the 200s as you did right here, you're in a bear trend. You recover the 200s as you do here, you're in a bull trend. You buy pullbacks to the 200s, right? Once you break the 200s, you're in a bear trend. What do? You short rallies back to the 200s. So that's that stock. Again, there's very little variance here, guys. I know I'm being repetitive, but that's what I want to see. If I'm shorting a sector or an index, I want to look at the top components and make sure they confirm and it's not some quirk, because maybe there's a very big overweighted component that, you know, has caused the index to drop, but then I look at the other 9 out of top 10 components and they're all bullish looking charts, and I don't want to, so therefore I might not short that index or that sector. I want to see, as I say, birds of a feather flock together. I want to see evidence that the majority of these leading stocks are also breaking down or about to, and that's the point of this video. Those that haven't are sitting right on or just above very nice support levels and or bearish chart patterns, such as falling wedges, head and shoulders, any other type of topping patterns. You can get some from candlesticks, and this one's poised to break down on any more downside. It's testing that wedge now. Not only that, guys, it's getting towards the apex. Rising wedge patterns and falling wedge patterns, which are bullish, typically break down about 70% towards the apex of the wedge. That's not a hard number. It's just from my experience. You can go up to 80, 90, but that's usually the sweet spot, about 70, 80% towards the apex of the wedge. Apex are where the two lines would converge. MEDP, negative divergence. Divergent high, just like you had a divergent high there. Off that divergent high, the stock fell 46%. You can see all three targets I have on that one, and I don't have a great uptrend line in which really to trigger a short entry. But again, the point of this video is as much of anything is to show you the that all these charts are telling me that they're all singing the same song. They're just sitting there. These are just waiting. Quite a few have broken down. Those that haven't are close to breaking down. That's when, in my opinion, the selling will begin to accelerate in IWM. If and when these that I'm showing you that are above trend or above, within above a trend line or key support levels or their key moving averages, once they take those out, you should start to see the selling accelerate in the small caps. CELH, Celsius Holdings, there's an uptrend line. It's about the only one I don't have a divergent high on, but that's not a necessity for a top, just like divergent lows aren't an absolute necessity. I like to see them to position for trend changes, swing and trend trades. That was a divergent high right there. It gave us that. Ended with a divergent low, gave us that so far. AVAV, there's your trend line. Big divergent high, just throwing that little spark, catalyst breakdown. And a little minor support right here. I'll give that level to you now. And then that goes, you can see my targets right there. COOP, Mr. Cooper. Trend line, break. KTOS, nice bearish rising wedge pattern, waiting for that breakdown there. BLDR, here's one. This is a great example of a stock. Okay, and this is how positive divergences work in bear markets. Remember, a lot of stocks, possibly the majority of stocks, we're close to it, maybe not the majority, but close, are in bear markets. Why the whole stock market's in a bull market. And again, it's mostly the large caps. I just showed you the small caps haven't broken out. They haven't gone anywhere in years. They're still testing the highs from several years ago. It's a large cap story because NVIDIA is the largest of large caps. So it's all NVIDIA, Microsoft, Alphabet, et cetera, et cetera. It's taking the market to new highs. But this is a bear market stock that peaked back here. And recently it tried to recover the 200s, but it failed. It had a divergent low. And so even in a bear market, I love trading stocks long in bear markets because the counter trend rallies are very powerful. And then, boom, like anything else, it runs its course quite often with a bearish chart pattern, negative divergence, right? Bearish rising wedge. sell signal. And this is what happens in a bear market. Once the bear market or the downtrend resumes, you get a sell signal. Look at this thing. This is, this is how quick things can happen. Once it broke the uptrend line in the 200-day moving averages, it dropped 14%. What is that? 2 weeks right there? And that's it. So when you look at longer term, that's what you have to do every now and then. Zoom out. And this is the big picture. This stock had a bull market from 2020 to 2024. And it started a bear market here, and it may have a lot more to go. All right, I'll do about 5 more. FN, you can see that just broke down from this wedge. Needs to take out 351.84 for the next sell signal, although it's on a sell signal now. I'm doing a little bear flag pattern here. Probably going to break down soon. CRS, coming off that big divergent high. Get the 200s just below it. Once they go, the stock should go see, it should come and visit this long-term uptrend line soon. That's going to be a drop of about 36% if so, and I have a high degree of confidence it will. BJ, which is BJ's Wholesale Club. This one's already broken down. Divergent high right there. Breakdown and took out the 200. See, it's been dancing, holding, buying pullbacks to the 200s, and then the 200s are lost. Now, that's a powerful sell signal. Both trend line support and 200s taken out. BJ's is heading to 85, 78.70, and then $64. So that's got another, if I'm correct on my read on the chart, at least another 30% downside. RBC dancing on 374.35 price support, but it's just broken down from that bearish rising wedge. So once that goes, then the 200s could probably give you a primary uptrend line too. There's your target, minimum target, guys, minimum. If those primary uptrend lines that I'm giving you here start to go, there's a lot more downside left in these guys. Then if and when, so here's how this works. Here's how my brain is wired. If and when I see the majority of these bull market uptrend lines go, it's going to give me a much higher degree of confidence that my long-term targets I started out early in the video on IWM are going to be hit. But for those of you who are bullish, just looking for a correction because the market's gotten a little ahead of itself, well, you can buy those. If you believe things are going to new highs, buy there with stops below and let it run. Otherwise, if you're bearish, then you may not want to buy that because you could go down through it. You may want to wait for a break below it to add to a short on RBC. Or again, collectively, if the majority of these stocks are breaking longer-term key support levels, then you can add to your IWM shorts or get back in if you game to bounce. GameStop, kind of moving in a range here, support at 2150. CDE, one of the big miners, silver miners, gold and silver. That trend line, when that trend line breaks, there's a lot of hot air, big divergence there, very overbought. These stocks are going to implode. And by the way, guys, I haven't shared this with you, but I did do last week, showed you the extreme record high margin debt, meaning that's from individual trader and hedge funds. I pulled some charts today from the St. Louis Fed, and look, we also have all-time highs in hedge fund margin borrowing from brokers. And so I'll but assure you this gold silver GDX trade has the same folks that are loaded up on NVIDIA and these high-flying tech stocks. I know that because they've been moving up together. So when we get enough selling that starts triggering those forced margin calls, as I told you, it's a vicious cycle. Selling then begets more selling, which then leads to more margin calls, and additional selling. And you'll see probably the bubble pop. I'm not calling gold a bubble, but it's certainly an overbought trend that needs a healthy correction. So that one's in CDs in there. SF, Stifle, right there, little trend line waiting to break off that divergent high. This one peaked back here, had a nice correction, like everything for every reason stated at the time. When the April lows was overdone, time to get long, had a bounce, still below that previous high. Just needs to take that level out. And there's your first target. Dual support. This is what I call a high probability price target. I'm going to give you, for my first target, if I were to take this one, would be right about here, 107.16. But then I expect, whether we get a reaction or not, come on down here at about that 103 level, which will be the intersecting 200-day moving averages, both the simple and exponential pinching together right there. and price support altogether. So that is it's not a huge trade, but again, it's what I call a high probability target. You're looking at about a 7.5% drop. And then if and when those go, which wouldn't surprise me, especially after reaction, then all these are likely targets in my opinion. All right, we'll wrap it up here for the smallies. Again, I can go on and on and on. I'm going to be a broken record, but that's what I like. That's what I wanted to see. Again, because I'm personally short the smallies, and I have it as an official traded deal on the site too. I'll just rifle through ARK fast because you've kind of got the gist of what I'm looking for. And again, there's other high flying. This just shows this is the risk on, risk off, king of risk on, risk off portfolios. This is, I believe, Kathy Woods, right? One of her main fund, and she buys those high flying, innovative companies. You can swing trade this thing like a grand piano. Look at this, just divergent highs, divergent low. Look at these trends and the drops and the moves on this, because she is loaded up on these high beta, high flying stocks. These are 43%. That rally there was 63%. They trades well to the technicals, because these are, again, a lot of these are market leading stocks in here. I'm going to go over these holdings. This thing's come full circle. We had in the markets too, in so many stocks, I had a very nice, clean, but they were very steep uptrend lines, and divergent highs, and we had breakdowns. And then you had this little kickback rally, including the stock market, which made a marginal new but still divergent high. And I've seen this many times in the charts. It's what I call almost a stay of execution, when it looks like that could have done the trick, but then you have this other thrust up. What it does, it just blows out weak-handed short sellers, and they cover, and then it changes sentiment, consumer sentiment, and in pros, they're subject to the same thing. It gives them that sense that the market's bulletproof and nothing's going to take it down. And if things change, if we didn't have the divergence, if they burn through it, and these indicators are making higher highs, I couldn't sit here and make a bearish case. I couldn't tell you that I think it's a stay of execution move. That's what I think it is. You get that temporary stay of execution, just like a prisoner on death row. That's not, it's just a temporary thing that they're still going to be put in the gas chamber. They just got a little more time now. And that's what I see here in the technical. So I'm going to rifle through the holdings. Again, you can see on the right, it shows me the holdings, and you have your usual suspects. So it's going to mirror QQQ largely, because I just showed you Amazon's a top component. Amazon, these I've covered quite a bit recently, already broke down, put in, like a lot of things, peaked back here, couldn't make new highs. You're seeing some of the market leaders failing to make new highs right now. Some have, but some haven't. And this one's testing key price support and the 200-day moving averages. So Amazon, I just need a little nudge on it. I need it to drop about 5%, and I'd like to see that next support taken out, because that's a little bit above the 200s there. But that will be pretty bearish. Last time the stock took out the 200s was right here. It tried to regain them, failed, and from that point had another 20% downside in its bear market from earlier this year. So that's where we're at. Okay. Also looks like a little bear flagging action going on right now on Amazon. So, the charts are lined up for something to happen, and I can think of nothing better. This market is just, and again, I've seen these type of markets. I've traded in. Investors have this bulletproof, not after what they saw. The world didn't come to an end after liquidation day when Trump announced all the big tariffs and we got this big rally. They believe now nothing can take this market down. You've got war drums starting to heat up in the Middle East, and Trump calling all these generals together, or not Trump, what's his name? All this stuff. I can think of nothing better than the shutdown, especially if it goes on longer than most expect, to trigger these patterns. So if that bear flag breaks down, we take out the 200s. Again, this is the last time the 200s were taken out. Not a good sign. If it does. Meta, just put in, it said divergent high, kind of forecast, it might make one more new one. It's roughly an equal, that is a divergent high, roughly equal high, again with lower highs than the indicators, and it just broke trend. It's at support now, And this one's already on a sell signal. There's nothing more to add. That's coming off a divergent high, trend line break. It's on a sell signal. Tesla holding up. I don't have much of an opinion now. If I look at the 60-minute chart, I'm going to tell you it's probably, this is just like that divergent high. Tesla will go up and then puts in these divergent highs on the 60-minute chart. It was a 26% drop there. Coming down to that trend line is going to give it about another 18% or so drop. All right, let's go back out. Palantir, divergent high, right there. Trend line, uptrend line right there. Needs to take out this trend line here. I'll zoom in so you can see it. There's your next sell signal on that one. And then there's a secondary trend line right here. Comes off the August 2024 lows. AMD already peaked back here. Like so many stocks, again, let's just not forget, so many stocks are still down below where they were last year, or in 2023, even 2022. And this one had a nice price channel, had a hell of a run off that April low. Again, everything, the market was gunned off the April lows. Should have been, fears were overdone. Everybody, not everybody, not us, not me, you heard me at the time, saying these 200% tariffs on China were absolutely ridiculous and false and wouldn't, and everywhere else doubling tariffs on every country out there, that wouldn't stand. And so then once they realized Trump was just a bunch of, hot air on that, and it was just a negotiating tactic, and then the market came back. And now what do we do? Again, it was a hell of a rally, but according to this chart, it's over. It ended with the break of that uptrend line off the lows. And now, once you have a sell signal, and again, it followed a divergent high, what do? You short rallies back to resistance, and we're at resistance right now, or you short a break of support. There's support. So you can either short it right here, where we're at right now, and or if it breaks the recent lows. And again, it's kind of like I said, these are a high flyer. Shopify, nice, clean, bearish rising wedge. Breakdown, back test, objective short right here. Hard stop. Take it, don't take it. It's up to you. There's my first target zone. 200-day moving averages are likely to come into play on a lot of stocks. Not all of them, but so I would put another target somewhere around here that comes in with the 200s, about 116.50, then 102. And then if things get ugly, you go down to that deeper target down there. Robinhood, oh yeah, a lot of these, especially these online brokerages, are going to take it on the chin when we finally get things going on the downside. So I can just tell you right now, I see easily Robinhood coming back to this long-term uptrend line, and 43-ish, what is that, 43.50 level, about a 70% drop in Robinhood. So my targets, just so you know, first one here is a 33% drop, then about a 52% drop, and then a 70% drop in Robinhood. And I see it in the charts. RBLX, Roblox, breakdown, backtest, and that rejection. I like to see that red rejection candle. So that one's an objective short here. If you want any of these, I'll have to, sharpen my pencil and mark up some additional targets for you. Coinbase, there's a little trading range here. You need to break down below it in the 200 days just below to give you a sell signal. But coming off that divergent high right there, so already broken down and then a downtrend, a near-term downtrend. XYZ, that's block. Needs to take out right here. You have triple support price about 71.50 and the intersecting 200-day moving averages. You need to take that out. SOFI, sell signal. This is an objective short entry right now. It was yesterday and it still is, in my opinion. That's a nice clean breakdown candle yesterday. Nice follow through today, and just a lot of downside left in that one. TTD, if I had put a gun to my head, I'd go long because we're at support. 1, 2, 3, long-term support with positive, aka bullish divergence. But remember, birds of a feather, so you get the inflows, outflows. That's what the stock market's all about, liquidity flows. When money's coming into 401ks, which it is 99, not 99, but 80+% of the time, because people are always putting in their 401ks, and then when rally starts picking up steam, you get more and more people piling in, momentum traders, but that reverses the other way. So if you've ever just take a minute once in a while, look at a long-term chart of the stock market, 20, 30, 40 years, and look at the bear trends and the corrections, and look how powerful they are and how fast they can develop, because that's when flows go the other way. And the biggest ones come from conditions like we have now, where you have excessive bullish sentiment and excessive or record high margin debt. And that margin unwinding bubble, like I said, is a vicious cycle that is phenomenally profitable to trade on the short side if you have the gumption to stay short, or if you're an active flexible trader like me, you want to game the bounces when they're highly likely. Just be careful with that. The hotter the bubble gets, what happens, you can start smashing through the initial support levels with little to any reaction. So and that is again because of the unwinding of the margin debt. So there's Trade Desk. Pinterest tried to break out. This is the primary bear market downtrend line. Pinterest peaked back in 2020. Downtrend line right there. I told you I liked it here recently. I told you a nice, bear market rally, big divergent low. This is when, trade these bear market rallies. That stock had 70% in it. But it's also right now from where it peaked in 2021, as of today, it's down about 70%. So that's how that works. And what happened recently? It tried to break out, failed. That's bearish. Oh, and then it went on to take out its uptrend line. Had a little false breakdown there. And again, why did it bounce there? For the reasons stated. That was the early April lows. All right. Natera, I believe I already covered that one. I did. That's part of the ARK fund as well. Teradyne, I don't have a strong opinion on it. It's at resistance. There's an uptrend line. Unity Software, uptrend line at resistance in a bear market. Again, like a lot of stocks are. Roku, big, sideways trading range, possible basing pattern. However, not one that I would take if it broke to the upside. If it does, sure, it could run any of these targets. But what I see, or what I spy with my eye, is a nice, fat, textbook bearish rising wedge pattern complete with negative divergence. So therefore, I would bet if it does break out, it's going to fail. And so either way, whether it breaks out or not, a break below this trend line is a sell signal. From my experience, when you have well-defined trading ranges, as you do here, this is a multi-year trading range, it's a very simple strategy. You sell the highs and you buy the lows. And usually once you go to the top of the range, your next stop is the bottom of the range. When you're at the bottom, the next stop is the top. Sooner or later, like all ranges, it will break. But that's it. So right here, I'm giving you a setup. It's clean, looks good to me. Again, if this something else goes on and the market is going to do a blow off top, Roku's not going to probably fall down here. IWM is going to break out of that triple top pattern and run. So I don't, again, these are scenarios that you know what needs to happen. Roku needs to trigger a sell signal here, and then you short it and you put a stop somewhat above the top. But if it plays out, you short this thing at the top of the range, and you can short it right now. You're at resistance. Just like IWM itself, I gave you the other day an objective short entry before we even broke down, because we're at that long-term resistance, the triple top high. So there's two objective times, in my opinion, to short a stock: a rally into resistance or a break of support. And so in this one, you can short here. You're at resistance or close, right at it. And you can also short or add to a starter position taken here on a break of that wedge. And your profit potential on this at minimum is a move back down to the bottom range about 50%, right? And you'll probably make that 50% in a matter of months, where most people are happy to make 50% in a 10-year period in the stock market. All right, guys. I'm just rifling through. I just skipped over this one. I don't even have the chart marked up. It doesn't have a lot of trading history. mRNA, big divergent low. So here's one, but it's in a bear market. Positive divergence could have a bear market rally, but it just got rejected off the 200-day moving average. It took them out here. Again, I don't, it's not one that I would care to short. PATH just broke out of a downtrend line but rallied right into resistance. So there's that. Needs to break that level. If it can break it, yeah, maybe it has a gap fill in it. But if it gets rejected, especially falls back below the trend line, the downtrend is going to resume. CRSP, I think I shared this one with you back when, or this year, we killed it on this one, Verb. We made 190% profit, got you in right here, and then they got bought out. This was the one along with CRISPR and Natera. They're all in that same kind of DNA, some do DNA modification, some do the DNA testing. And so, this was, again, would have paid for, quite a few annual memberships on just this trade alone. And again, that's the point of that, is it reminds me of this one. It's in, I shared it at the time, it's in the same kind of sphere. So that's one I don't care to short right now, is what I'm trying to tell you. And I don't have much of an opinion on the chart. Fundamentally, I like the story. Archer Aviation, divergent high, already broke down. VCYT at resistance with an uptrend line right there. I'm just kind of showing you. Already peaked here on that divergent high, bearish rising wedge. There was your sell signal. It was good for a 47% drop into the July lows with a nice positive divergence right there. And that's giving you a rally back to the 200s, where it's probably going to get rejected. It had a brief momentum fueled overshoot. If it breaks this trend line and falls back below both the 200 simple, there's where it lost the 200s right there. Then it's probably going lower. Beam Therapeutics, I don't have it marked up. I don't have much of an opinion there. Yeah, I didn't mark some of these down on the bottom here. Oh, I marked this one. NTLA just took out a downtrend line right there, which I was watching it when I did. It's a 40% run. This is a nice clean. Look at that, nice clean downtrend line. Boom, breakout, but pretty good resistance right there. It's probably going to cap it. I don't have some of these marked up, guys. All right, I'm at the end of the this one. I do TXG 10 times 10x genomics. Breakout of the prime. This is a good example. This is big divergent high. The stock peaked in early 2021. And you can just swing trade these bear market rallies. Bullish falling wedge, nice rally. But it's been in a downtrend. Here's your downtrend line. And it's been getting sold on the on rallies back to the 200s. And it just got rejected off the 200s. And then it took out this uptrend line off the lows recently. So that's pretty bearish. And that's what tends to happen with bear market rallies. They look good. They feel good. I mean, if you can get them, I love trading them. They're profitable. Just don't stay too late to the party. That was about 120% rally off that low right there. But it's probably it. And it's probably going to continue its bear market. TGXTO, PRAME, Prime Medicine, breakout. That's a bullish chart. Look, divergent low, took out back the 200s, which have been capping this thing since really it came public, once it lost them. And back tested the 200 exponential and the uptrend line. That was a textbook entry. I wish I would have saw this, noticed the stock then. I didn't. I just started, following this ETF for the reason that I'm stating. But you have this little bearish rising wedge going negative divergence. So that's probably it. Again, this is a stock in a bear market. Bear market rallies are just, like I said, phenomenal to trade. 417% off the bottom. But if you bought this stock after it came to market after the IPO here, you're still down 76%. So that works. PACB, Pacific Biosciences. Again, you can see these bear market stocks just getting pinned down by those 200-day moving averages, coming off a divergent low. So these are the ones that personally I just wouldn't want to short individually, because if it breaks that, it's got coming off the divergent low, breaks that, it's going to run up here to 271. That's going to be a rally of about 86%. So again, these are trade ideas, especially for those of you only looking for longs. So I went over here, went over all these stocks and showed you, that majority are either in bearish technical posture. They might be in bull trends, but their technical posture is bearish, and or they're in larger bull trends, but they recently triggered sell signals. All right, last one there is this one right here. I'm going to tweak this trend line. Created this recently, but I'm going to move it up here because we've had 2 violations. And so that's it. So this is CERS, the last of the holdings in there. And that's it. So there's one that could break out and run as well. So these are the ones that I would be more apt to go long than short. But overall, I just presented enough evidence, especially with IWM. Remember, what I'm doing here doesn't have anything to do with some of these were small caps, but most of these in this ARK fund were large caps and some mid caps and even some smallies. All right, I'm going to wrap the video up here. You guys know my thoughts. You know the levels to watch on QQQ and IWM and, well, just about everything else. I'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.